Hey, what's going on, guys? I'm Dr. Boyce Watkins from the Black Business School, and I hope you guys are watching on the Black Financial Channel. If you're not, it's okay too, but I wanted to give you guys a quick update on what's going on with the stock market. If you are an investor, then you probably have noticed that the stocks have actually gone up today. Today's a little bit better than yesterday. Yesterday was a complete bloodbath. But it happens, markets go down, markets go up. But I'll give you some quick updates. One of the things that I'm reading, that I'm kind of gathering, that I agree with, is that this trade war with China, between Trump and the Chinese government, it's not something that's expected to last forever. It looks like it's something that they're working to resolve. And a lot of the reason that they're seeking to resolve the trade war is because there's just too much to lose. Trump and the United States, we need our relationship with China. The Chinese need their relationship with the United States. Now, Trump makes the argument that he's in an advantageous position because the Chinese, they actually export more to us than we export to them. So if you notice, when Trump put the tariff on $200 billion worth of Chinese goods, the Chinese retaliated with tariffs on about $60 billion in U.S. goods because there's a trade deficit between the U.S. and China. Now, the thing that Trump, I think, is not calculating is that there's a lot of levers the Chinese government can pull. A lot of the U.S. Treasuries are owned by the Chinese. The Chinese people are excellent savers, and so they own a lot of our debt. And so they could start selling the treasuries, right? And just, ruining that market. But the problem with that, though, is if they start selling off the treasuries and the prices of the treasuries go down, well, it hurts the value of the treasuries that they still hold. So the bottom line, the main point that's being made here, which I agree with, is that the U.S. and China both have a strong incentive to make a deal because our economies are so intertwined. It's almost like if you're married to somebody and you say, well, I'm going to get revenge by punching you in the face. And then they say, okay, fine. Well, I'm not going to, I'm going to stab you in the stomach while you're sleeping. And then the other person says, well, I'm not going to pay for your spa, for your spa treatment. And then, the wife comes back and says, well, I'm not cooking you dinner. Right. And then the husband says, well, I'm not gonna watch your favorite movie with you, or watch a movie with you every Friday during date night. And then she says, well, I'm not having sex with you, right? It's like when you have a deep relationship like that and you're deeply connected in that way, and you're constantly have a lot of trade, a lot of quid pro quo. It just, nobody wins when you're going to war, because every time you go at them, they can retaliate, and then you retaliate to the retaliation, and then it just escalates and gets worse. And that's what everybody's really afraid of, is that they don't want the trade war to escalate. But the interesting thing is that there are also fundamentals that drive stock prices, like corporate earnings and things like that are very, very strong and stable in the United States. And so there are experts that would argue, like, look, yeah, the trade war is bad and the tweets are crazy, but when you look at fundamentals in terms of how the U.S. economy operates and the fact that corporate earnings are pretty strong, those fundamentals tell you that the decline can only go so far. So I'm not going to say that anybody can predict what's going to happen in this market, but what people are basically saying, and I agree with this, is that there are strong enough fundamentals that we can expect that things will get better before they get too much worse. But then again, don't think that it can't get worse. Don't think that other bad things can't happen, because Donald Trump is an emotional kind of guy. He's strategic, but he's also emotional. And one thing that is occurring is that when the U.S. went at China with the tariffs, the Chinese retaliated, and then the U.S. retaliated to the retaliation. At the same time, Trump is tweeting that, we're getting closer to a deal. The Chinese should be making a deal. We're going to make a deal. And I believe that they're working on making a deal, but I think all this retaliation is definitely something that is worth worrying about. But again, if you want to know from an investing standpoint, what I'm doing, I'm just being consistent, just doing what I did, a month ago, just being, consistently acquiring assets. Because even if you buy a stock at $100, and if the price drops to 80, at least you got $80 of your 100 left. You have something to show for it. If you take the $100 and go to the movies with it, you're going to have $0 left. You'll have a memory of a great movie, but that's pretty much it. So that's my philosophy on investing. Don't forget, I have a great investing class. If you want to join, you can go to theblackstockmarketprogram.com, theblackstockmarketprogram.com. Feel free to check that out. And also make sure you hit the like, share, and subscribe button before you're done. I'm Dr. Boyce Watkins from the Black Business School. See you later. Have a great day. Be good. Peace.